Rohr here with an early morning concise highlight on Tuesday, July 1st, 2014. It's currently approximately 6:15 a.m. U.S. Central Time, and we're looking at macro influences that include mixed data out of Monday, but mixed to the plus side, and that's part of the reason the equities kept the bid in a modest way. And this morning, we're seeing a lot, of course, of the top-of-month data. Out of Japan, we always get the Tonkin survey. And it was interesting that the large manufacturing and non-manufacturing was just slightly negative, but small manufacturing was positive. And moving on to the global PMIs, we have China, as expected, at 51, but important that that is still above 50, which is much the case elsewhere. Other than France, the European PMIs were a bit mixed, but the UK was positive, and we're headed into the US ISM manufacturing PMI today, along with construction spending. However, one other macro factor is always worth mentioning at the top of the quarter, and that is the top of the quarter investment flows. A lot of the dividends and other forms of income that people get right into the top of the quarter finds its way into the equity market. So there's a natural, just a bit of a bullish bias in this part of the quarter. And maybe that's also part of what was showing up yesterday as we move on to the short-term chart of the S&P 500 future. This is September future, 30-minute on the left, 30-minute on the right, hourly on the left. And what we've seen is this reversal out of last Tuesday when it traded up to a new high for the contract and a very minor new continuation high. This only got back just barely above the 1959.5, which the June contract showed shortly before expiration. So a little bit of a minor double top on the weekly chart. More importantly, later on, a week ago today, the market sold off into lunchtime, first of all breaking its aggressive upward channel from about the 1953 area, and also that 1953 was the previous close on Monday. That left the market then on a downside reversal, a one-day downside reversal that's proven to be pretty fair resistance on subsequent rallies back up, including coming out of last Friday into yesterday morning on Monday. And that stalled the market so far. However, the overrun upside objective, the runaway gap objective on the daily chart and weekly chart at 1938, has proven to be good support, as well as the upside acceleration area. We'll view on the chart for the last time out of the FOMC influence being more dovish and accommodative than people had expected. So there was good support back at 38 as an overrun objective that the market had then reacted back below, but now is trying to maintain itself above. And that ties in with some important short-term and intermediate-term Fibonacci supports down into about the 1935 area. And the market, as you can see, held very nicely there on a couple of fairly sharp sell-offs last week. And now the question is, can it escape this 1953 to the tolerance at the trading high at 1955.5? And if it does, then it probably can run up to this week's oscillator and topping line resistance, which is up in the 1965 to 71 range. And in terms of the indicators, it's very interesting that the hourly stochastic is up in what would be a topping area, but without some further weakness from up around the 53 to 55 area, it is more likely to just stay pinned up in that area. No real critical indications as of right now on the hourly or 30-minute MACD. And what's important this morning is the market is indeed up at about 1956, so trying a bit to escape this resistance pre-opening we'll see what happens once we get into regular trading hours. And that's about it for the short-term view of the S&P 500. Moving on to the intermediate term view, what we can see, first of all, is clearly that this has been a fairly minor correction of a very major upward trend overall. Here's your topping line up at 1971. That's a very well-established topping line of the overall major channel up from the 1068 low back in 2011. So this is a pretty major decision up here. If it gets away, it's going to speak of some real acceleration. And as you can see here, here's your downside reversal on the September contract from that 1953 area that it has held immediately into lower support at 38 to 35.